Hi everyone, this is Devins Financial Weekly Stock Analysis Newsletter. Today is January 31st, 2016. Our newsletter is for your informational purpose only. We're not responsible for your gains and losses. Let's take a look at current market trend and our strategy. US market has a confirmed rally last week, and now it's in a confirmed uptrend. Some leading stocks broke out from a base. I'm currently long the leading stocks, and I bought some of them as they broke out from the base. I'm going to show you the market indices and its chart. First is the German DAX index. It had a rebound last week, but the German index is still in a downtrend. NASDAQ monthly chart, I showed you the NASDAQ broke the annual average, 12-month average for the second time recently. The first time it was last year, August. Now it's the second time it broke the annual moving average. However, it reaches previous low made last October. Weekly chart, you can see clearly. It reaches previous low and had a rebound. This is a daily chart, NASDAQ daily chart. You can see on this day when they had a one-day reversal with a high volume. And then last week, Friday had a follow-through. Actually, the last week, this Tuesday, had a follow-through already. Then the Friday is a very strong uptrend. It broke this little range and the volume is high. That's indication that institution is buying into this. So in this area, their support, their big fund is buying the market, so they lift up the market index. We can see from this chart, it looks like a 50-day moving average, which is 48.85 right now. It may just come down a little bit as we go on. So somewhere around 4,800 for the NASDAQ, that would be the resistance for this bounce. So anticipate market will hit the resistance and came down a little bit, and then we don't know what's gonna do next. But usually when the market recover from the sell-off, this is a big sell-off, and usually it makes a double bottom or reverse head and shoulder. It's very rare to have a V-shape bounce. Like last year, August, the market made a double bottom before it went back up again, but it didn't go back up too much and came down again. So for now, we can continue play the rebound. However, bear in mind, when the market hit 4,800, it may hit the resistance. Mid-cap performed much better than the NASDAQ on Friday, so it's rebounding right now. Small cap monthly chart, and small cap actually broke previous low. Small cap weekly chart, this is the weakest. Small cap is much weaker than the large cap. It broke the last September's low, broke a lot actually. It just came down quite a bit. Now it's also in a rebound. SP 500 is a large cap. This is a monthly chart and broke last month low, and just undercut last year's low. And we can see here on the SP 500 large cap, it broke this low made in last October and August and October made a double bottom. Now it undercut the low and the rebound right now. See, on Friday the volume is really high and the percentage of the gain is high. That's indication that institution is buying this market. Gold daily chart. It's interesting to see the gold that actually is making a recovery right now and stay above 50-day moving average. Is making higher high and the higher lows. It's just going like that and to going up. So once the gold can go above 200-day moving average, or better yet, if the 50-day moving average actually reverse cross up to the stay above the 200-day moving average, then we will have a golden cross, means long-term trend will turn up. So I'm watching gold closely to see if the long-term trend can go up. Silver is making a similar turn than gold, so it looks like I try to break above this little trading range. So let's watch gold, and gold is it's becoming interesting right now. Gold mining stock ETF, and looks like a also try to stand above 50-day moving average, which is this yellow line. So that's a good looking chart right now. So far so good. US dollar still in the uptrend. Crude oil still in the downtrend, but had a very strong rebound last week. Energy stock rebounded as well. Energy stock broke above this little trading range, so that's promising. China Shanghai Stock Exchange Index, this is a monthly chart, still in the downtrend. China market weekly chart is still in the downtrend. It actually broke last July. Last July it made a new low and it broke that low. So daily chart, as you see, it's still in the downtrend. FXI, this is a China ADR. FXI is rebounding. So will FXI, will this ADR lead the China market? We don't know yet. Let's watch it. US biotech downtrend, still in the downtrend. Rebound a little bit on Friday, but the trend is not good. Real estate index rebounded last week. Jets, this is the airline stock. Also try to, no, this is still in the downtrend. Doesn't look very good. Copper downtrend. NBB is a bond price. It may reach this high, so the bond interest rate is on the low point right now. Semiconductor rebounded, and social media network, this one rebound. Solar stock and try to make a base right here as well. Financial ETF, and this is good, is making a rebound from the low. So we have to watch financial, continuously watch financial, because the financial sector tend to lead the market, whether it's up or down. So okay, that's all for the index. Let's take a look at the stock. And there are 3 stocks I like to show you. They have, all 3 of them had broken out, but they're still in the buy range, which is defined by the within 5% from the breakout pivotal point. That means those stocks are still buyable. Facebook and RAI and Ross, ROST. This is a department store. And then there's another 3 stocks on my watch list: Google, ISRG, and Starbucks. So all of them are IBD leaderboard stock. So I'm going to show you just on the IBD chart. IBD leaderboard chart has a lot of notation, which is good. Like Facebook, it broke out from this base. This is a cup without handle base. It broke out on Friday. The breakout pivotal point is $101.42. And the buy range can be, I'm sorry. Yes, that's $101. That's a breakout pivotal point. Sorry, 110. Sorry about that. I'm reading the wrong note. The breakout pivotal point is above 110, and which is 110.75 That's an interim point. That's a breakout pivotal point. The buy range extended to $116.29. So as long as the stock is below $116.29, it's buyable. And as Facebook broke out and the volume is high, that's a good sign. Okay, now that's a Facebook. Let's look at another one, RAI. And this stock is broken out from this flat base, or you can see this is a cup base, and $49.66, that's a buy point. And buy range is extended to $52.14. So as long as the stock is below $52, you can buy that. And relative strength is very bullish. That's compared with other stocks. So this stock performed very well. You want to buy a strong stock. And IBD also give you the fundamental rating. Looks like a pretty good too overall. And Ross store. Take a look at Ross store. And Ross broke out from the cup with the handle base. Friday, it was the breakout day. $55.74. That's a buy point. And 5% of the pivotal point will make the buy range up to $58.53. And on the breakout day, the volume is high and the relative strength has been very strong, 93. That means this stock performed better than 93% of the other stocks. So this is a strong, the fundamental looks okay. We do have a lot of red lights, but there's nothing, no stock is perfect. So this still meet the certain criteria, so it's viable right now. Let's take a look at the second list. The second list are the stocks that doesn't have a clear breakout yet. I'm sorry, I seem to lose track of my. Okay, give me a second. Okay, let's take a look at Google. Google will report earnings on February 1st. That has to, we have to be very cautious to buy the stock right before the earning. If you don't have enough profit cushion, then the earning can, I mean, there are a lot of times the earning have a gap down or gap up. We just don't know. So we have to prepare for that. So it's better to buy after the earning, not before. Or if you buy a long time ago, you still have a lot of profit cushion, then you can hold over the earning. That's not a problem. But if you haven't bought it yet, buying the stock right before the earning is not a good idea. Anyhow, Google looks like it's still making a base, but what's promising is on Friday, Google went above 50-day moving average, which is this red line, and with a high volume. That's a good sign. So Google using it above 50-day moving average, and that's buyable. However, because of the upcoming earning, if you haven't bought it yet, you may want to wait and see how how the investor react to the Google's earning. Okay, let's look at the Intuitive Surgical, ISRG. Intuitive Surgical has broken above the cup with the handle base, but it came down again to be below the base. But it's not too bad in the sense that it's quickly went back above 50-day moving average. That's a good sign. So right now, Intuitive Surgical is in the buy range. Let's look at the Starbucks. Starbucks actually still making a base, but it's the same thing on Friday. It broke above the 50-day moving average. So right now it's pretty good. It looks like you can buy a small position inside the base, but it hasn't broke out yet, and you can use the rest of fund to wait for it to break out. So there are several entry points. One is 63.29. That's the high of this previous high. Another is $64.10 is here. So if Starbucks can break above those levels, that would become buyable. For now, if you want to buy inside the base, just don't use too much money to buy it. Control the position size. Anyhow, those are the list of the stocks that I'm watching right now. What to do in this market? In this market, definitely we should not short. We can long the leading stocks that are within the 5% of breakout pivotal point, or we can long the stock market through the index ETF, such as QQQ. That's a ETF for the NASDAQ, and SPY, that's an ETF for the SP 500. But just bear in mind about the resistance. If NASDAQ hit 4,700 or 4,800, it will run into resistance. So keep in mind of that. That's all for this week. See you next week.